Welcome to the Market Mystics podcast, where we discuss what's happening in the cryptosphere and trading on Earth as it is in heaven. Buckle up and huddle on while we dive in and get weird. Here are your hosts, Joshua and Kim.
Good afternoon, everybody. I think today we're actually going to talk about crypto, which I feel like we haven't done for a few episodes.
It's been a while.
Welcome back to Thursdays.
Well, let's start with some crypto market updates. We do talk about that every time, at least.
We do,
yeah. Kind of. Okay. So Bitcoin is down about 1.5% in 24 hours and up 3.2% over 7 days, hanging at about, actually, an hour ago, it was just over 20,000. Right now, it's sitting just under 20,000 at 19,883. Ethereum is down 4.75% over 24 hours. Down almost 7% over 7 days, sitting at about 1,500. Our biggest mover today is the Celsius network, which is CEL, the number 62 top coin. It's up 13.1% 24 hours and up 39.5% over 7 days. It's hanging at about $1.88. We talked about Celsius probably about a month ago. It was also a biggest mover then. So Celsius Network is a peer-to-peer lending platform allowing users to borrow and lend cryptocurrencies. We talked about this a month ago, but we're going to talk about it again. On the 13th of June, they made an announcement that Celsius was pausing all withdrawals, swaps, and transfers between accounts on its platform to address market volatility. I will tell you, I checked this morning, it is still halted at the current time. So that is 3 months later. On the 13th of July, they filed for Chapter 11 bankruptcy. And yesterday, which I'm guessing this is the reason why the big move today, yesterday, the judge in the bankruptcy case, approved the use of an independent examiner in the case, which is what the Celsius community and a group of its creditors have been asking for. So apparently that made people happy.
One thing I think is interesting is I went back and I looked at our notes from a month ago when we talked about this coin, and it was trading at $2.92, and today it's trading at $1.88. So it's a full dollar less than it was a month ago, but based off of that news, had a spike in value. And I always think it's really interesting when the top movers are repeat top movers, because generally it's not because they went up and then they went up again. It's generally because they went up, down, and then up. And I mean, yeah, that's opportunity, but it's also that's some volatility right there.
Yeah, I just went back and looked at the 30-day for Celsius, and it's down 33.75% over 30 days.
Yeah. And 64% over a year. Yeah. So, I mean, at least there's positive news. If you're stuck in Celsius, maybe there's some positive news for you. But otherwise, yeah, I would probably not recommend that coin to anybody.
Not that we're financial advisors, because we are not.
We're not. Just our opinion.
Okay.
I am surprised. I know this isn't what we had on first, but I am surprised that Ethereum has not moved more today and that it's actually down.
Why do you say that?
Well, because this morning Ethereum completed the first step of their merge. So they are another big step forward towards Ethereum 2.0. But what that makes me think, and I think I've said it on here before, but stocks and crypto often move more on the news of something rather than the event of something. And so by the time we actually get to the event of something happening, the market's already priced that into to the coin or to the stock.
Mhm.
And I feel like that's what we've seen here with Ethereum is, not very long ago, Ethereum was one of our top moving coins because they had announced the date of the merger. And now we get to the day when it's actually happening and it's down 5% in 24 hours. And the merge was successful. Like nothing went wrong with it. Like
Right.
so that to me says, hey, the market was already anticipating that this was going to happen. And it made its move a month ago when they started that happening. That's interesting to me. It's fun to see those patterns happen with things.
Sure. I'll be curious to see. I mean, I'd like to talk about the Ethereum merge because it was a huge step in them transitioning from regular ETH to ETH 2.0 or whatever it is that they're calling it right now.
Hmm.
They keep changing the name of what it's going to be, but originally they
Right.
said ETH 2.0, so I'm sticking with that. So the merge was a big deal. They've been talking about it for months. Um, Essentially, this is when they have transitioned from proof of work to proof of stake. So that's what happened early this morning is they flipped that switch. And like you said, it went pretty successfully. It's kind of interesting to me because I read an article that there was a watch party on YouTube. People like watching it happen. I can only imagine like Apollo 13 movie kind of thing. And you know what I mean? When they're all in what is that room called?
Like the
Control, command,
yeah,
something. I don't know.
Houston, we have a
Yeah,
problem.
yeah,
That
yeah.
room.
Yeah.
Yeah, yeah.
Uh, I can only imagine all the people there like just waiting on bated breath. And apparently after about 15 minutes, they found that there had been no issues. Everything went smoothly. Um, but what I'm going to be really curious to see is how they move or don't move in the months to come. Because I know why they're changing from proof of work to proof of stake. It has to do with energy consumption.
Mm.
But that comes with other changes, I would say, that could be good or could be bad. And I think they're moving because of one issue, and the market will tell whether people are happy with it or not,
Mm.
you know?
Yeah. I can tell you this is my concern with proof of stake. To do proof of stake, you have to have, I think it's 32 Ethereum to be an approved validator.
Let's see, we have it in our notes.
Okay. Uh, that's based off of memory. Yeah, 32 ETH.
Yep.
Um, okay, so to be a validator, you have to have 32 ETH, which at the current price is $48,000, which is going to take away the majority of just your consumer retail investors because they're not going to want to stake that. It'll take away the majority. It's not going to take away all of them. So you're going to have larger groups, larger conglomerates coming together and being the proof of stake validators. And I have this internal concern that, my favorite thing about crypto is it tends to be decentralized. And I think this is actually a step towards centralizing crypto. And that's, it seems like, okay, here's this, we have this fiat money system and we see these flaws, we see these areas that are less than ideal because it's controlled through a single source who decides how much gets printed and when it gets printed and all this,
Mhm,
all these
mhm.
issues with it. And then we see crypto step in and it's like, hey, here's a decentralized thing that functions independently and through a group of people partnering together, it functions as one. So it's decentralized centralization. It's a really unique tool. But I feel like this is almost a step backwards in saying, maybe we want a little bit more control. Maybe we want to lower the amount of people who have voting rights in how this is done. And that to me is not, I don't know, maybe it's too soon to say that it's going to go one way or the other, but it raises concerns for me. Not that the other way was flawless as well, but definitely raises some concerns about how things are being handled.
It's interesting you say this because for once, note to our audience, we didn't converse about this beforehand. We agreed that we're talking about it, but we didn't have any discussion on it before. And I completely agree because already there's a company called Lido, who's kind of a community-run validator collective. They control over 30% of the stake on Ethereum. And between Coinbase, Kraken, and Binance, three of the largest crypto exchanges, they own another 30% of the network stake. So that's 60% of the Ethereum that is staked, that is held by 4 companies, which is significant when let's just look at their market cap right now. Their market cap is at 183 billion.
Wow.
So that doesn't leave a huge piece of the pie that other people are going to be able to actually reap the benefit. So let's rewind a little bit and talk about how you can benefit from staking Ethereum. You touched on it a little bit. Let me see if I can find it in the notes. We're going way out of order of our notes, but it's totally fine because this is just the conversation. Okay, so proof of stake, number one, does away with mining entirely, right? So currently, or not currently anymore, I guess currently it's proof of stake, but on proof of work, there were miners, you could have a machine, a computer. I could have a machine or a computer. I didn't, but I could have, that was mining ETH. There are companies that had just big warehouses full of machines constantly running, which is where they were getting the concern with the energy consumption and why they wanted to change. Okay, but in proof of stake, miners are replaced by validators or people who stake at least 32 ETH by sending them to an address on the Ethereum network where they cannot be bought or sold. These staked Ethereum tokens act like lottery tickets. The more ETH a validator stakes, the more likely one of its tickets will be drawn, granting it the ability to write a block of transactions to Ethereum's digital ledger. Staking, I'm a bit concerned with it because when you have 60% of that whole market that is held by 4 companies, then they're the ones who are going to get all of the benefits. And so what then is the benefit of staking Ethereum if you're a normal person, even going through the process of getting the 32 ETH, which is a hefty price tag, and then staking it? It says you'll have more chance of winning the so-called lottery of having that staked if you have more. And it's concerning to me. I'm also concerned about it. I don't know that I think it's the best way. And so for me, it makes me less likely to want to get newly involved with Ethereum. Again, this is not financial advice. This is just purely my opinion, personal, how I think about things, right?
Right.
But it just is, I don't know, it just doesn't seem as, like you said, decentralized friendly, I guess.
Well, this is the issue for me is there's 2 ways to look at it. There's the trader way, and is there potential to make money by trading Ethereum? Sure, 100%. And then there's ideological fundamental reasons for investing.
Okay.
And I think that's where I struggle with what Ethereum is doing. Is yeah, I recognize that maybe something needs to change with the way mining was done and the energy consumption. Like maybe that's not a perfect system. Maybe that does need to be altered or changed to some degree. I know that's a huge thing that people talk about with Bitcoin all the time is, hey, there's this is crazy. It takes so much power. And so maybe there is something that needs to change about that, but completely abandoning um, the way the coin is governed for that sake seems like you're now changing your ideological system that your coin is built on. You're not just changing your energy consumption, you're fundamentally changing what your coin is built on.
Bingo.
And that to me is a big deal.
Agreed. But you and I also both tend to be investing based on fundamentals and
Right.
ideology, as opposed to um, I don't know, like short-term trading.
Hmm.
And
Yeah.
yeah,
Yeah. I mean, there's still there definitely is still opportunity to trade Ethereum and be successful at doing that. And maybe I will do that at some point. I don't know. But yeah, I mean both of you and I we believe in cryptocurrency fundamentally and ideologically. Like we believe this is the next evolution in currency, and so that changes the way you view these events.
right. That's why I'm really curious to see how the market responds. I mean,
Mm.
I think the whole switch from ETH to ETH 2.0 is supposed to be finished around February. But this was one of the biggest events in that switch.
Mhm.
So I don't know, maybe we'll keep giving updates and stuff, but I will be really, really curious to see how traders respond to this. And it will be reflected in the markets.
Yeah. Yeah, I'm curious because I saw something and I haven't looked into it too much, but that we already have like Ethereum Classic and Ethereum, and that's when they rolled back the blockchain when there was a hack that happened, and some of the people said, "No, we want the original authentic blockchain." So they kept Ethereum Classic going. And then now I'm seeing that maybe there's going to be like an ETHW, which would
Mm-hmm.
be the Ethereum proof of work, so the still the old one. And I don't know if that will eventually go away at some point, um, because it seems like it probably would. Like it seems like probably that's going to go away at some point because the way I understand it, like this new chain they've started using the new chain and they're just like after the switch happens, it'll fully be switched over. So I don't know if they will keep the old one up and running. But that's really interesting to think about. And I think probably the majority of people who are mining Ethereum, if they already have their system set up for it, they might just start mining Ethereum Classic, and maybe we'll see Ethereum Classic have a a much better a much better run. Like I don't know.
They've
I
already kind of been having a good run. They've been outperforming ETH a lot of the time. I don't know that I
Yeah.
can say a majority of the time. They've either been keeping up with or outperforming ETH in the last few months. And
Mm,
that's been interesting to see because more of the hype has been coming out about the 2.0, the merge, all the things, which in the beginning people were really excited about. And it is now, again, the numbers are interesting to see today because ETH is down almost 5% in 24
mhm.
hours since the change happened. And Ethereum Classic, where was it? I put a note in here. I should have highlighted it. Ethereum Classic is up 2%. So that's
Yeah.
7% difference.
Yeah, and price movement in the past 24 hours. That's a big deal.
Right.
The other thing I think is this isn't necessarily about Ethereum Classic, but I want to watch this and see what happens with this. The last block of proof of work was used to mint an NFT.
Oh.
And I'm curious what's going to happen with that. So currently this morning it sold the first time for $757, and then it sold again for $3,000, and now it's for sale for $15,000. It's not sold for that, but that's what its current price is.
Mm-hmm.
And so I'm curious, like, is there going to be value in the last Ethereum proof of work block?
Right. Oh, that's interesting.
That could be, I think that'll be fun to kind of follow that and see what happens with that. Just because there's that, to me, I don't know, there's something, people are nostalgic sometimes, and I think having that last, there could be something with it, especially if Ethereum is super successful, or if it's not. Like, I'd be curious to see what happens with that, like this thing that just exists as the last and final piece of the old one. And if the new one is super successful, I could see that piece being worth quite a bit of money.
Agreed. I could see it being worth a lot of money, whether proof of stake is successful or whether it's really unsuccessful, because people will go, remember when it was proof of work and it was so great? This is the last thing that came from it.
Yes.
Right?
Yeah. I think to sum up my feelings of proof of stake is the initials of them. Like, proof of work is usually POW and proof of stake is POS. And I think that just sums up kind of my ideological viewpoints on proof of stake.
Oh, I think we have our title. Oh, funny. Okay. Well, on that, I think we can wrap it up for the day.
Yeah. Do you want to go over the other thing or just leave it for now?
Yeah, we can just leave it.
Okay.
Okay. Thanks for joining us today. We will see you again next Monday for Mystic Monday. We'll see what kind of wacky and weird things we can talk about then. And then hopefully we'll talk about markets again next Thursday.
Let's do it.
Okay. Bye, guys.
Bye, guys.
Thank you for listening. Join us every Monday and Thursday as we discuss trading on earth as it is in heaven. If you want to connect further, follow us on social media at market.mystics for Instagram and TikTok, and search for Market Mystics on YouTube and Facebook. If you still need more, follow the link on Facebook to book a coaching appointment. Until next time, see ya.